Hey guys, it's Eric with Inspired Trading. I'm outside. It's a nice, cool day down here in Powder Springs, Georgia, right outside Atlanta, Georgia. So I hope you guys are having a great day. I'm excited to be here. So, listen, we're going to talk about the head and shoulders pattern. I think it's a real good, simple pattern to trade. Once again, it's rules based. Everything we do is support and resistance. I mean, that's it. All right. So the head and shoulders pattern, it sounds like something like, oh, wow, that sounds like a nice little strategy name and ring to it. It's support and resistance. That's it. All right. So I already labeled. We're on a US dollar, Canadian dollar. We're on a 1 hour. Um, so this trade did go well for me this week. And I counter trend traded it too. So that's a great thing. All right. We got the left side. What do we have on the left side? We had a what? We had a push up, all right, and then we ran into some resistance, all right. We had a high, then we got pushed back down here and we created a lower high, and then we pushed up higher to create a higher high, all right. But we did not break this area, so therefore we just formed a left shoulder, we formed a neck, and then we formed a head because we had a pushback. Okay. Now price is coming back down to where the neck, and what is this again? Recent area of what? Support. Okay. This is now resistance. That is resistance as well too. All right. Price broke down, tested the support, and then we bounced off this. We bounced off the support, and then we found what? Resistance. Okay. So when we found that resistance, it created the what? Right shoulder. Okay. So when you're looking at this trade, you don't have to go through all the technicals of saying, oh, that's resistance, whatever. You'll normally be able to glance at it. And I'll show you on an AMD stock that I traded today where you'll see what I saw. Okay. So price came up, rejected, started to come back down and test these area again of support. So there's two ways, it's a couple ways you can trade this. You could have found entry up here at the right shoulder, and you could have rolled it down to where? Recent area of what? Support. All right. That would have been just a safe bet. It did come down close. All right. And then we had a minor pullback, and then it went down and hit your target if it was the support area. All right. So that's one entry, a target. Or you could have held on to this trade and wrote it down to the downside targets. I'm going to go over the targets in a minute. All right. Another entry could have been, let's see if we break. We'll wait for confirmation to break this neckline, which is the support. As soon as it breaks, you can enter in a short on this. All right. Here's one of the issues you may have. You're up and you're down, and you're going down. You're great in profit, and all of a sudden, what the price do? It came back and then retested this area. And some things you can do. If it came back and retested this area, you could either add more to your position, or some people, what they do is they put their stop loss to break even. Now they just got their stop loss hit. I don't really like that type of trading strategy. If I'm gonna put a stop loss, I'm gonna put it at least deep in the profit. So if it do come back, I'm making some money. I'm not doing no breaking even. All right. Or you can keep your order in. I always go with a light entry on the first entry, and then on the pullbacks, I then stack it and add and go heavy on my positions. Is it risky? Yes, it could pull back up in here. All right. But however, my stop loss will be somewhere in here if I'm entering right here. Okay. So I may do a 10-cent lot size. We get down here, and I see clearly we having some issues and we're coming back up. Then I may start look to add some standard lot sizes in because I feel confident that it's coming back up to test this area, and we may get it pushed down. All right. So those are different scenarios. All right. Well, the third scenario is you decide that you're not going to enter it until it what? Retests the area that used to be what? Support. All right. It broke support, then it becomes what? The new resistance. So if this is a new resistance, you wait to come back up to test the new resistance, then you enter in. That is probably the safest of all strategies of entries. It's waiting for a retest. It's boring. It's long, very long. And if you don't have patience, I wouldn't use that strategy. But it's great if you have some patience. All right, so you gotta wait. So think about it. This thing, it broke down this hour. All right, so you got 1, 2, 3, 4, 5, 6, 7. It took 7 hours to come back to test this area, and then it consolidated here. So you're just ranging back and forth, and you like, come on, man, you need to drop, and then finally it dropped. So you gotta think in that accumulation stage and that consolidation stage. I mean, all it is all the orders are being accumulated to provide the necessary volume to be able to move. Okay, when anything accumulates, it doesn't have the necessary volume to move it in any direction strong. So it's just in the consolidation stage. All right. And a lot of times too, the markets start swinging and knock certain people out of their positions as well. So in consolidation, you got to be very, very patient. All right. All right. So we had to push down. All right. Now let's go back and let's get these targets. Remember, you take it from the head and you take it down to whatever shoulder, left or right shoulder. All right, I take a trend line and I just take it straight down. Okay. And I bring it down to the bottom of the neckline. All right. And so this is the measurement. So this is a downside, ultimate downside target for this trading pair. All right. Down in this area, put a little green box. We expect price to come down here. But this is actually the second target. Our first target will always be whatever was the most recent area of major support after you break a support level. The next level of major support. So after you break this support level, you look left with some major. That's the level we want to. That's the first level we want to trade to. Okay, we want to get out. All right, this is the area to get out, and this was a successful trade. We did enter right here on the breakout. Okay, and we rode it all the way down to here, and you can see it right here. See, price came down. All right. Why did we say we want to get out? Look what's happening. Look at this. All right. Look at this impulsive bullish move after it bounced off this support. So we want to be safe. All right. Be safe. Take the profits off the table. Okay. All right. Now, what are we going to do now? It's a possibility that we could come back up here and retest this area. Now this trade, this head and shoulders pattern, is still in play, but at the same time, we met our targets. Okay, that's the first target. We may get back up here and retest. Okay, and it's a possibility that we could stay within this channel. We don't know. All right, or we could break back above this, and then we'll retest this area. If we break above that, then we retest this area again. You just got to respect the pattern that's happening. But you do know that if we break this support, we know that we have this level next that we need to visit. Okay. If we go to a higher time frame, we probably can look left. We go on the 4 hour, look left, and all right, look a little different there. You look left, what do you have? Look at this major area of support. Okay, this is recent area, so we know that price could come back into this area. Now you see on the chart, I already have downside targets, and one of these downside targets is based on a gap that's down here. You can't see it. It's clear. Let me move this over so you can see. All right, this is not a candle. That is a moving average. All right, but this is a gap. See, price was right here, and then it gapped up. So this is a gap. So that's a target to the downside that eventually this price will actually fight to get to. All right, but in the meantime, we have these different levels we need to fight through. Now, ideally, if I had the patience, I figured prices would come back down in this area. I've actually traded this pair since here. All right, let me show you how I'm really impatient to a certain extent. Everybody told me I'm the king of taking profits real early. Hey, man, if I be up $100, I take that thing. I'm done. Look where we at. All the way back down to this neck line. Well, not this neck line, but this support line. This is 740 pips. And I do play around with standard lot size pretty much, or 0.5. Man, that's $7,000 right there. I just basically almost left on the table. Yeah, I made some good money for the month, but you clearly see since March 19th, look at this move from March 19th all the way to April 13th, 740 pips. All right, my patience it will allow me to, but I'm working on it. So I'm thinking about creating another account to trade in just for long-term holds. Maybe go a little aggressive, like maybe a 0.5 and let it ride. So I have to go on a higher time frame for that. So that I'll just give y'all that idea of showing you that when you zoom out, you'll see a lot of times that you do have the right direction, and you get caught up in the all the movements inside and stuff. And sometimes you just need to learn how to get in a trade, sit back, let it run, and don't bother it. All right. So trust in your own analysis. All right. I've been knew this stuff was going to come back down in this area, but sometimes I was just jumping in and out of the trade. And I did good, but just showing you sometimes you need to trust yourself. All right. So let's get back to it. So yeah, so that was a head and shoulders. You see the first target was hit. We have potential for the second target. All right. If this move is still valid, which is a strong, impulsive, bearish move to the downside, we could possibly go ahead and do a fib analysis, extension. All right. Remember, I had that long trend line going down from the head, and look where it fell, right at the fib. So this is some form of confluence. Okay. So now this is downside, but don't mix this up with that first one. I had a skinny one somewhere up in here. There it is. All right. That's the potential target. If what? We break this. We have to break this. This is a target area that we can head to. And like I said, there's two ways you can do it. You can you measure it from here to the neck, bring it back to the neck, and there you go, right there. All right. I just used the fibs to give you the target, and I just used the measurement from the head down to the left or right shoulder area. All right. So you saw two ways you could get your targets. I show you a third way, and just pure support and resistance. And what I just showed you is still support and resistance. The fibs levels just give you think of the matrix, just certain things you don't see on the chart. But when you pull the fibs up, it gives you those levels for you. But those are the extension levels. If you look left, you'll see that that's the area of support. So if it breaks this resistance, what's the next major area? Right here. All right. What you want to do, if you can, or if you want it to, just take an area right here, drag it over. Right. Boom. If it breaks this, we know that it wants to hit here, and it can do what? It can come back and retest this area, okay, and then go down. So that's why I tell people, when it breaks a region, don't go so heavy right off the bat. You need to wait for a retest. I'm about to show you why you need to wait. Look over here. Or you don't have to wait, but you may want to go a little light. What happened here? It broke. It broke this area. It broke it. And that's not a good one. Here we go. Sorry. All right. We're going to take this out because we would have known that we would have never known that was there. All right. So we're going back in time. Okay. Look what happened. Price came up and it got what? Rejected. It came back down. Okay. And then what happens? It broke it, but then it came back down and retest. Okay. So let's pull it over a little bit more so you can see. All right, here we go. Take this. Price got what? Rejected right here. See that? Got rejected. Came back down right here. But here's the problem. You also saw that it got what? Rejected right here. At this candle. See that candle right there? All right, so since when it got rejected, you said, oh, okay, that's resistance. Then it came back in here again. It got rejected again. Oh, okay, that's resistance. Found support. All right. Then it came up here and then it broke it. You said to yourself, every time it break, I need to get in. So you don't put in a standard lot size. You don't enter as soon as it broke this area. All right. Let's see what happens. You broke it. Put a standard in. You're up 40. You see that? You're up 40 pips. Possibly $400. You feeling good. Here's the thing. Yes, if I'm up that much, I'm putting my stop loss in profit. So price could come back down, knock you out of the trade. You in profit, you good. But remember those who like to set to break even. You got up here, you move your stop loss to break even, and came back down and wiped you out. Then you got those who want to put their stop loss somewhere deep in here, or you may put it down here, but that's really dangerous if you want to put it that far down, especially with a standard. Okay, it's because if you do it that, look how much. It's over 300 something pips. Like, it's stupid. I wouldn't do that. That's a lot of money. All right. So you clearly see price came up, and then what happened? It pushed all the way back down here. So you remember I told you sometimes when it breaks, you might want to just put a small lot size in there. Do 10 cents or something. Test it out till you get confirmation. All right. So price clearly turned around right there, and then it pushed lower. So price came up and pushed lower. All right. Now we're looking for what? It broke again. Put your 10 cent in, and then what did it do? It came back and what? It retested. It retested this area. Price came back. It came close. It didn't go all the way, but it was like it retested. Okay. Then we had a strong break. All right. It's called a narrow candle broke by a wide candle. Here it is. See this red candle? It's a narrow candle. This green is a wide-ranging candle. It engulfed it. Normally, when a candle like this engulfs a red small candle like that, signify that we're about to be into a strong bullish move. All right, let's pull this chart down, and what do you see? You see a strong move to the upside. Okay. So going back to if we would have entered as soon as it broke this neckline over here, you got to be careful because I just showed you over to the left what could happen if you go too heavy when you're on that breakout. You may get a pullback, you may get a retracement. It can just knock you out of the trade. So you got to, like I said, you got to be careful. So that's what the safest thing is. People wait for a retest, and they're being very, very patient. And I agree. It's one of the safest ways to make sure you stay in the game. All right. So let's go to AMD. We're on a 5-minute chart. All right. Reason why I went to the 5-minute chart. Anytime I'm trading a stock option or even a stock that's considered a blue chip, I go to one of the lowest time frames. A lot of people like the 3-minute, or yeah, I think the 3-minute. It's right between the sweet zone. I do the 5-minute, but reason why we want to go so low is because you can see that the stock can. Let's say this stock was $53 earlier in the day, actually up to $54 some change. All right, now it's hovering at 52.37. But sometimes it can move sideways. It doesn't seem like it's moving much, but then when you clear out and you go down to the lower time frame, you do see that it is moving. Like you can see right here on this chart, this thing did move today. All right, but I immediately, when I opened the chart up, I saw a head and shoulders pattern, and this did not. This wasn't here at the time, but I put a green box here because I did the measurement. I identified the left, had the right head, and then I had the right. I'm sorry, left, head, and right. You go what? From the head down to one of the shoulders. Put it on top. What happened? Targets hit. What did I do? I actually got in early. I just had a feeling it'll go. I entered right here. All right. So yeah, so I entered in at this price point, and I wrote it down to my green box, took profit, got out, put a put contract in on AMD. Okay, so you clearly see that the head and shoulders pattern, if you identify, can work on any time frame, can work on stock, uh, commodity, forex pair, etc. Are there failures? I'm pretty sure. Let's go look at Bitcoin. Let's look at Bitcoin. All right. We're on a 15-minute chart on Bitcoin. We possibly got a what? A left shoulder, a head, a right shoulder. All right. You got the neckline. All right. Got a neckline. Okay. It's already broken this neckline. All right. And then now we have what? A reversal. But here's what you need to look at. This could possibly fail. Okay, because you have to. Let me go ahead and just do the targets to the downside. Right here. Bring it down. Here. All right. This is an area where Bitcoin could correct to. All right. So that's one of the areas. Okay. Let's see the confluence. Let's take a fib retracement. Extension tool. Take it down to here. Bring it back up. So we do have confluence, meaning that they do fall in our target zone area. All right. So that's a good thing. But here's one of the things that's happening right now is this is called an inverse head and shoulders. So it's good. I'm glad this is happening. So I may not even have to do another video. We can go ahead and we go over this now. This is the head. The inverse is the opposite. Get the head. What is this? Left shoulder. Right here, left shoulder. Right here. Left. Right. Right. Right on this forming right here. Okay. So we got the right. So you see clearly within this trading, you got a head and shoulders, but then all of a sudden an inverse head and shoulders just formed too. So we didn't watch this right. If this comes back down to here, then this is void. It's invalid. Okay. So we have a right. How do we measure? Same way we do the head and shoulders. From the head up to the whatever shoulder neckline. Bring it back up here. Put a target box here. So it's a possibility that we can come back and retest this area and then maybe see a drop. Let's get the what? Extension tool. Take it from here to where it was rejected. Bring it down. All right. Okay. So we don't have as much confluence, but we do if we pull up a field retracement. It's probably going to fall on one of those. And it fall where? Right in between on the golden ratio, which is a 61%. So you can also draw a box right here. So then now you have two targets to the upside. So if this right shoulder holds up, price could come back, test this area. If it breaks this area, then it's going to hit this area. It's all done because of this. Even this, if it hits that, it's because of this. It's an inverse. An inverse suggests a bullish. It's a bullish pattern. All right. So that's one thing we need to keep an eye on. Okay. Remember, there's rules, right? When are you going to take this trade? Somebody right now, you can enter in. You can take a chance to enter in right here. If you're trading this, if you're investing, I wouldn't do any buying in this area right now. I'll wait for a significant pullback. Okay. Um, One thing you need to understand about Bitcoin is price. The reason why it moves so heavy over the last day or two, uh, there's a lot of organic buying. There's a lot of people, retail investors are buying. So the institution's not even in a ball game right now. So that's something to really keep your eye on. Okay. Because there's nothing right now for the institutions to jump in and even pump the price even higher. All right. And then we can see a huge pullback. Okay. So that's something we need to keep in mind. But matter of fact, I'm on a 15-minute too on this Bitcoin. So you like once again, we done did a 5-minute, we done did a 15-minute, we done did an hourly, and we done did a 4-hour. So you see on different time frames. All right. So like I said, these could be the targets down here, or if when we want to enter it at, we want to enter when it breaks the net line. All right. Or if you enter here, then you know you're gonna have to face this neckline again as a resistance. All right, you can get up here and get rejected and pushed down. And if that happened, this head and shoulders still will be in play. Although you won't have your traditional just pure left and right, you have a more of an extended right. That's like a form of consolidation. It can just come out into this area, consolidate. All right. But if we break this, remember, go a little light because why? You can have a pullback. You have a pullback to retest it, then you can go a little heavier. All right. Because you don't want to get up here and then all of a sudden it's pulled back against you and now the trade goes against you. Okay. So it's different methods of how you can scale into the trade so you won't get so much drawdown. I've been a victim of drawdown a lot, so I get it. I understand it. All right. So how we gonna get the downside targets? What do we have to do? We have to break this. What used to be a head for this inverse. You got to break this level. Simple as that. All right. Right now, there's no reason to even trade this. Look at this channel that is in. If it breaks this, we're going what? To the downside. Break it. On the downside. What? Look left. Look at that. This is area of support. Let's zoom it in. Look at this. Support. See? All in this area. And what? Support bounced up, went stronger, right? Went high, lower high, higher high, lower high, higher high, lower high. That's a sign of an uptrend, right? Like I said, got high, lower high. It failed to get a little higher high, lower high, higher high, lower high, higher high. Now that failed. So if this failed and you see this, we got a trend reversal now. Okay, we have failed to break this level. And guys, you understand it don't matter on what time frame that you trade on. I mean, in the grand scheme of things, it could matter, but for the most part, you can do area analysis on any time frame. Chart is a chart. If I didn't tell you what time frame was on, you look at the chart, you think it's the same. If I stretch this out, it's like that. It's not much you can, that you can tell. Okay. See? Now you may tell the difference structure wise, but if you just look at it from the naked eye, you might, like just a regular time frame. So let's get this downside targets, possibly, because what we have here is we have what? We have a huge impulsive move to the upside, and now we're clearly in a correction. So we can measure this. So we're going to take Fibonacci retracement, swing low, swing high to the top where it was rejected in 9,457. All right, so this head hit where? Go to ratio. So it's some good things here. This move to the downside could be over with, and we could head up and go higher. That's why I said, look at this inverse. It created an inverse. So these targets up to the upside can be uh, a realistic probability. All right. So you see, we're at the 61%. We could go up here and hit these targets. All right. Why can we go back up and hit these targets? It's because we had this impulsive move is very, very strong. We got a breather. Why we have this breather is because people are taking profits. All right, people are unloading. Okay, that means this means that you got what, more sellers than buyers in the market, so therefore the price drops back. Why is the price dropping back? To what? Attract more people in the market to buy at discounted levels. I mean, that's just the psychology of the market. Okay. The more of a sale or something you have, and you don't have enough buyers, it cheapens the price point. It's as simple as possible to explain. Okay, so we also got this 78% that it could come at down here and test this level too. Okay, so you have to respect that. All right, but I did in the other video. You do know that I told you that on the key level is for us to break this level right here. We got to break this. Don't matter what Bitcoin is doing right now. got to break 10.5. If we don't break 10.5, it could be bad, but a good bad. Okay, a good bad. All right. So get rid of some of these support resistance lines. But yeah, that's basically it for the video, guys. Always ask questions. Please hit the like button, subscribe to the channel. I'm here to learn just like you guys. If you got any constructive feedback, if you got any insights, uh, please post them, etc. I hope you guys have a great evening. I'm gonna go ahead and eat some scallops and some salmon. But yeah, we gotta break this level. We broke this, came back, we retested it. You see this candle? We retested this area. So price is still above. All right. But we gotta get out of this channel. If we don't, this could be a massive drop to the downside. And if it is, we may come back down here and visit this $4,000 range. All right. So, all right, that's it. Have a great one.